Hello, everyone. Great to see you here today. It's always fun to come to this breakfast, because the ones of you that come to the breakfast, you do it because you want to be here, you want to hear the speaker, and you're willing to give up sleep. You know, people have been asking me a lot. I don't know if you've heard, I'm going to retire. Maybe you have. And they ask me, what are you going to miss? What do you miss when you leave? But let me share a few things with you. First of all, I hope that you know, and you will have the same response that I had. When you walk across campus, enjoy it. Come back and walk across campus often. And I get to do it every single day, multiple times. I walk around the campus, walk back and forth between parking lots. And we take it for granted, but it's just a beautiful environment. And then when you see students that are doing the same thing, we've got students here from high school. Same thing. Think about what those students are going to be doing years from now. Because I was talking with Eric, EWIBW, right back here. I remember the first time that I met him. It was the old high Q program that we did, Ralph Hipp and Eric. And while they were finishing the program, I would sit down and we'd talk with Eric, and he had his son with him, and must have been about 5 years old or 6 years, something like that. And I said, well, how's that young man doing? I said, well, he's 30 years old and he's got 3 kids. Okay, thank you. But think about what the people that you will see, the students that you will see, and what you can help them achieve just by saying hello to them, just by saying good morning to them. Find out, ask them a question maybe. And that makes this campus and this university different than a lot of other places where we have that kind of attitude, I think, that people will feel that kind of environment when they come to the campus. And so I hope you continue to do that. I hope you don't take for granted the fact that we have Wake Up with Washburn, and we do it regularly. You can depend on it happening. And I hope that you don't take it for granted such that, well, you know, I don't want to get up this morning and go out there. I don't want you to take it for granted that you don't have to do something today on campus. Get involved in it. Get involved at the university. There are a lot of things that you can do. I don't think I see anybody in here that has one that'll qualify for this. But once you get to be 60, you can come back to campus and take a class. The one that has done that is, raise your hand, baby. Once she dressed me down because I hadn't told her that she could do that for free. She has been doing it every semester, literally every semester. And she takes classes that her undergraduate degree and her graduate degree didn't really prepare her for that, like biology. You've taken every biology course I think that we have. And she comes and takes it. Now, the one thing she doesn't do, and you have the privilege of doing this as well, is that you don't have to take the test. Okay? And so you go through it and you can enjoy it because you're not under the pressure. Come back and do something like that. Get involved with the campus. Think about what you can do to give back to the campus, because I hope that the campus has been giving to you. It's been a pleasure. It's been an outstanding opportunity for Susan and I to be a part of this for the short time that we've been here. And it's a great honor for me. And I don't have many of those. Well, I do have one that I may be able to replace it now, that I ran for and won the presidency of my 3rd grade class for the 3rd time. Good to have you here. Thanks for what you've done for Washburn. I look forward to seeing you on campus. Good day.
That last comment reminds me, in the 5th grade, I ran for student council in my homeroom, right? And it was me and another young lady. She's a friend of mine. She's also the best looking student in the class. She remains the best looking female of our class. Don't tell my sister-in-law I said that. I voted for her rather than me because I had to be nice to vote for her rather than me. I lost by 1 vote. In any case, good morning, everyone. Everyone always asks me, how are things going this semester? And my usual silly response is, I assume okay, because we haven't had any crises yet. And after a couple years where it seemed like we had daily crises or big crises and problems to solve all the time, it's been nice to be back in a reasonably normal semester, at least what feels like that. In the school business, our enrollment is up this fall, head count wise. We've got a lot of new freshmen and sophomores coming into the school. Our seniors that graduated last year and our MBAs that graduated last year continue to score very high on the major field test in business. That's the exam we give to the students. The test of business knowledge, we can benchmark against 600 or 700 other universities around the country, and we're still in the top 20, 25% on that. Part of what the school does is try to take education in some ways outside of our campus here, the 4 square blocks of our campus. Next week we partnered with the Greater Topeka Partnership. We will have an economic outlook conference. It will be held over in the Union. So we're pleased to be able to do that. One of the speakers is Dr. Paul Byrne, one of our economists. Yesterday I spent all day at Security Benefit and Federal Home Loan Bank here in Topeka. It was part of the Kansas, let's see, we'll get this right, the Kansas Insurance and Financial Services Education Foundation program where we give students around the state the Kansas Insurance Certificate if they earn it. And we had students from all over the state of Kansas here yesterday in Topeka. And I viewed it as a way to get students to Topeka from all over that maybe they would come and work for these companies, and that would help drive economic growth here in Topeka. So we were pleased that they were here. They talked about the Claytons a little bit. I guess you guys hang out in the K-State a little bit. So this morning, kind of over here on this side, I think we have a couple dozen students from Washburn Rural High School here this morning as our guest. We have a kind of a neat program with Washburn Rural. Two of their instructors, Kathy and Brian, teach a couple courses out there, and then the students also take our online version of those same courses, personal finance and introductory accounting. And so the students they don't have to take it for the Washburn credit, but they can. And if they do that, then they get their they get a few more boxes of college credit checked off before they ever leave high school. So we're glad that they're here this morning, and then hopefully we'll grow that program in the future. Let me end on kind of a personal note here. April of 2003, I was sitting in my office in Montgomery, Alabama, and I get a phone call from a guy named Jerry Farley. And I'd been out the month before for an interview, and apparently everyone else said no when they asked him. So he asked me, David, it's a wonderful day on the Washburn campus. Would you like to come to Topeka? So I picked up my family, our 2 dogs, and two very reluctant young ladies, and we moved to Kansas all those years ago. Dr. Farley's been very supportive of everything the school's done. We had to get some money together initially those first couple of years to get the school accredited. I remember that. And but he's done everything else that we've supported up until now, including the renovation plan or the funding plan for the renovation of the Henderson building. So Dr. Farley, thank you very much. All right, with that, Ann Shelton is a Topeka native, graduated from Silver Lake High School and came to Washburn University to study accounting. While a student, she was a member of the Campus Activities Board, the Accounting Society, and Alpha Phi sorority. She earned a Bachelor of Business Administration degree in 1984 and her CPA certification in 1986. Ann has fond memories of her college days at Washburn, mentioning that her professors were always there to help. It helped her secure scholarships to help reduce the financial burden. She went to work for Blue Cross Blue Shield, where she was for more than 37 years. When you see her in a minute, you'll think she started when she was probably 12. And retired this year as Vice President of Finance and the CFO. One of the highlights of her career was leading her outstanding team of working individuals who helped maintain financial strength, implemented cost savings across the company, and spearheaded the implementation of a new financial accounting system on schedule and within budget. Ann serves on the foundation board of the Directors for TARC, and is also on the Topeka Lutheran School Board of Directors, and also has helped us as a member of the advisory board for the school business. She's been recognized in the community, 2021 YWCA Woman of Excellence, and is a member of the 2013 Leadership Greater Topeka class. She also participated in the Blue University Leadership Quest program. Did I teach you in my class? Economics? Okay, I taught that. All right. One of her proudest accomplishments is developing a strong work ethic that allowed her to succeed in her chosen profession. Her mom simply wanted her to excel in her career so she could take care of herself, and that she did. Ann and her husband Ron have two children, Connor and Rachel. Since her retirement, she now has more time to spend with family and enjoys her hobbies of exercising, reading, gardening, cooking, and relearning to play the piano. Did we used to have a piano in here, and she can play this one? Okay. All right. Ladies and gentlemen, please join me in welcoming back to campus Ann Shelton.
Good morning. Good morning. I can't believe they talked me into doing this. You know, I'm an accountant by trade, so public speaking isn't exactly what I rushed to do. But I thought it was really important. Washburn has meant a lot to me. I mean, it really provided me the avenue to pursue the career that I was chosen to do. And so I know you're all excited to hear about healthcare and how changes have occurred throughout the many years. But I wanted to tell you a couple things about my Washburn experience here. I always knew I was going to come to Washburn, and I don't know, I mean, I knew they had a great accounting program, but I also knew that my financial situation was probably going to have me living at home. And since I was already a Topeka native, it seemed like the absolute perfect choice for me. Now, when I first decided to do this, I was working at Merchants Bank, and there was a gentleman there that said, you have got to talk to this particular professor before you enroll. He's a great individual, really get you set out on the right direction. So I thought, well, not knowing a lot about Washburn at that point, I thought this sounds like a perfect solution. So I called Dr. Walter James up. That man was the best professor. I mean, he challenged the students, he taught them well, he was committed to their success. He was my advisor for all 4 years that I attended Washburn. He helped me with my class schedule every semester, like Dr. David mentioned earlier, is that he helped me look for scholarships I was eligible for. He really created a lot of stability for me. I actually looked him up before I was going to speak today because I thought, why am I not telling him this? And I have to say I was really sad to see that he had passed away earlier this year. But I think just what that made me think about is that if there's somebody that's really made a difference in your life, make sure you tell them before it's too late. The other thing about Washburn University was, as was also mentioned, I was a member of the Alpha Phi sorority. I knew that I was not going to have the traditional college experience since I wasn't going to live on campus. But what the Alpha Phi sorority did for me is it really helped me stay connected to the school. It also gave me an opportunity to meet a lot of good people, and it even gave me the opportunity to have some leadership experience because I was treasurer of the house during my time. And in regards to those special friends, Julie Olson, the development director of the Alumni Association, was my pledge daughter, and she's the one that convinced me to speak today. When I graduated from Washburn, Blue Cross was my first position. And as you can see, it was probably a good decision for me because I stayed there my entire career. One thing I want to say about working for a company like Blue Cross, when you graduate in accounting, there are so many opportunities, more so than I ever knew as a student coming to Washburn. I started out in Medicare audit, so I got my audit experience. I went over to cost accounting, got my cost accounting experience. I did budget, I did tax, I did financial reporting, I did government reporting. All I got to say is what Blue Cross provided me was an opportunity to really use all of my skills that I had learned during my accounting experience here at Washburn. So it was a good place for me, and I really enjoyed it. One other thing that Washburn, or Blue Cross, did for me is it really encouraged volunteerism. And as was mentioned, I am still currently on a couple boards, and one of those is TARC. And real briefly, I wanted to mention, I just attended a few months ago their grand opening for their feeding clinic and audiology clinic. The feeding clinic, they've actually been doing this since 2013, but they never really had dedicated space. And I have to admit, I didn't exactly know what all of that was about, and being a member or being on the board of TARC, it really enlightens me to some of the services that individuals need that some of us just take for granted. So now with this grand opening, they have dedicated space for their feeding clinic. And so they're going to be able to serve a lot more members or clients, I guess, from the age of 3 all the way to adulthood. And so these individuals have feeding and swallowing disorders that really makes it difficult for them in regards to their quality of life. But if they can get the kind of treatment that TARC can provide, not only does that quality of life improve, but these individuals have a lot greater chance of having lower healthcare costs down the road because they've been given the kind of treatment that they need. Well, now I guess I'm going to have to take you to that healthcare topic that I was asked to speak to today. So I was trying to think about what would be interesting. And of course, it's kind of hard to really say healthcare is going to be interesting to everybody. And I know some of the topics I'm going to talk about today, some of you may think, well, that doesn't really impact me, or maybe that does. But I think what I realized when I was pulling the information together, I said, it's really kind of interesting. Even if I'm not directly impacted, it's still something I think we all should know because there's a lot of people, and probably people you know, that will be impacted by some of these healthcare changes. So the 4 topics I was going to try to talk about today is I wanted to share some of the specifics with the Affordable Care Act. And believe you me, that bill is a pretty lengthy bill. So I'm definitely not going to touch on everything. And so I'm only going to explain the things I kind of understand. I want to share a little bit about what we saw in the health insurance industry in regards to what COVID did. I want to explain what mental health parity is, and then I thought I would wrap up a little bit about Medicare and the blues and so forth and what's out there. So let's get started. The Affordable Care Act. Okay, the Affordable Care Act was passed into law in March 2010, and it had an effective date of January 2014. Now, one of the many goals and objectives of the ACA was it wanted to expand access to care, it wanted to increase benefits, and it wanted to lower the costs to our consumers. So let's talk about the increase in benefits. Now, a lot of individuals already had insurance when the ACA was passed. So what does that mean? Is everybody going to have to change their policies, change their coverage, everything's going to be turned upside down? Well, the decision was made that anybody that had, and this was primarily individual small groups. Large groups were impacted a little bit, and I'll get to that. But these individuals and small groups, if they had a plan and they were covered by health insurance, they could keep that plan the way it was as long as it basically stayed the same. Benefits had to stay the same, their cost that they would incur had to stay the same, and the insurers needed to continue offering that plan. If all of those conditions were met, then those groups or those plans were considered grandfathered, and they did not have to adhere to the requirements of the ACA. Now, you didn't have a plan prior to March 10, 2010. So if you purchased a plan Eventually, you are going to have to convert to an ACA compliant plan. So anybody that purchased after March 2010, even if they had enrolled in a plan prior to 2014, they were going to have to change. Now, what was the main change associated with those plans? Well, the ACA said that a compliant plan had to include 10 essential health benefits. Those 10 essential health benefits included ambulatory services, emergency room services, hospitalization, laboratory and prescription drugs. It needed to include maternity and newborn care. It needed to include mental health and substance abuse, pediatric services, preventative care and wellness, and rehabilitative. Now, you'd think that those seem like all pretty common benefits, but not all plans included all of those benefits. But going forward, all 10 of those needed to be included in any benefit plan that you purchased. Now, some of the other common changes that came about as a result of the ACA included young adults being covered by their parents' policies through the age of 26. The reason this is so relevant is that a lot of times insurers would have a young adult roll off, usually by the age of 19 if they graduated from high school and didn't continue on to college, or they might roll off after they graduate from college. This group of individuals were one of the largest percentages of individuals who were considered uninsured prior to the ACA. So that's why it's really beneficial. I know my kids really appreciated not having to pay insurance. And I still have one who's got a few more months yet that doesn't have to pay for insurance. So it is a really good plan, and it really makes sure that our young people receive the care that they need. Another change was that preventative care needed to be fully covered. So isn't it great now that you can go have a doctor's visit just for your regular checkup and you don't have to pay a copay if you have an ACA compliant plan? Insurance companies could no longer have annual or lifetime limits on any of the coverages for these essential health benefits. They also could not deny coverage or increase the premium if you had a pre-existing condition. And this was a big concern for individuals who had a health condition and were impacted by premiums or even being able to get coverage. So these were all real positives. Now, one of the big changes that came about as in regards to lowering the cost of health care is that there was a subsidy program developed as a result of the ACA. This subsidy program, the primary one, is called a premium tax credit. Now, what the premium tax credit does, it's based on, it helps you reduce the amount of premiums you're going to have to pay for these plans. And it's for individuals. And what it is if you earn between 100 and 400% of the federal poverty level, you will be eligible for a portion of a premium reduction. And it's based on your household income on a sliding scale. So when I think about federal poverty level, I don't really look at those numbers a lot, but when I kind of looked at it just to see what we were talking about, I looked at a household of just one. So you're an individual just living by yourself. 100% of the federal poverty level for 2022 is $13,590. If up to 400% is $54,360. So I kept thinking about, well, what about those that are under 100% of the federal poverty level? What happens to them? When the ACA was first drafted, the plan was to require all states to expand Medicaid. And that was going to expand Medicaid to, I think, about 138% of the federal poverty level. Because right now, prior to the ACA, there were some states, everybody had different rules as to how they had people qualify for Medicaid. So what happened is that in 2012, the Supreme Court of the United States said that the federal government could not force states to expand Medicaid. So there are about 12 states left that do not have not expanded Medicaid. Kansas happens to be one of them. So there are individuals that fall in that coverage gap. Not only do they not qualify for a premium tax credit, they also do not qualify for Medicaid. Now, luckily, Kansas is one of the relatively small numbers. I think I saw an estimate about maybe 45,000 individuals that are still uninsured, but it's definitely something we need to be aware of. Now, one of the things regarding the 400% and the premium tax credit, the American Rescue Plan of 2021 temporarily expanded the eligibility, or expanded the premium tax credits. Not only did they increase the amount of premium tax credit that they were going to give, they also included people that made more than 400%. Now that was applicable through 2022. Then with the Inflation Reduction Act that was just passed this past August, they've expanded that beyond through 2025. So they're increasing, because that was one of the big things. They said people need a bigger tax credit. So that's what they did. They got a bigger tax credit and they provided it to people that were over that 400%. There is another subsidy that is included in the ACA called the cost-sharing subsidy. Now, what the cost-sharing subsidy does, it actually helps with the out-of-pocket, it helps reduce the out-of-pocket expenses that you incur for your deductibles, your co-insurance, and your copay. Now, to be eligible for that, it was between 100 and 250% of the federal poverty level. And neither of the acts I mentioned previously have expanded that beyond the 250. And one of the things that needs to be mentioned too, to get any of these subsidies, you have to enroll in the exchange, on the exchange. And I'll mention that. I'm getting ready to talk about kind of the exchange. But plans that are insurance companies that agree to sell on the exchange, they could sell the same product on the exchange or off. And what that meant is people could enroll directly, like for example, to Blue Cross. They didn't have to go through the exchange and it would be the same exact product. But they wouldn't be eligible for any of these subsidies if they went directly to the insurance company. So let's talk about those exchanges. Now, each state had the option to build their own exchange. And the federal government was going to help subsidize the cost of doing that. If a state chose not to, then everyone would enroll through the federal exchange. Now, Kansas chose not to develop a state exchange. So everybody enrolls through the federal exchange if you're a Kansan. One of the things about operating on the exchange is insurers had to decide, they had to have insurers agree to sell products on the exchange, otherwise this was really not going to work. Now, the plan was, the way the government set it up is there were 4 primary health plan categories that could be sold on the exchange. And they were identified by metal levels. So you have a bronze plan, a silver plan, a gold plan, and a platinum plan. Now, the quality of services for each of those metal levels was going to be the same. What was the difference? It was really, the difference was kind of the out-of-pocket. If you bought a bronze plan, then your premium was going to be the lowest, but your out-of-pocket costs, if you had medical services performed, were going to be higher. This changed as you moved up the metal levels until you got up to platinum, where your premium would be the highest, but your out-of-pocket would be the lowest if you had medical services. Now, there was one other plan that could be sold by an insurer if they chose, and that was called catastrophic. The catastrophic was really only eligible if you were under the age of 30 or you had a hardship exemption. And not all insurers actually offered these plans, but they were available by some. Now, one of the things, too, to note, as far as those cost-sharing subsidies go, the only way you could be eligible for one of those subsidies is if you enrolled in a silver plan. That was one of the ways that the federal government established that. Now, thinking about the insurers, there were a lot of unknowns with this population. You didn't know what their health conditions were. You knew they probably had pent-up demand because they hadn't seen their doctors, and so there was probably a lot of services that they needed to be performed. So there were a lot of insurers really hesitant about participating on the exchange. Now, one thing I can say about Blue Cross is they've always had the philosophy of insuring as many Kansans as possible. So there's really no question whether or not they were going to participate on the exchange. But as far as the other insurers go, there was just one other insurer that participated in 2014. And as expected, there were some losses that were incurred the first years of the exchange. But we knew that would probably happen. But we also realized you couldn't jack up the premium so high that even those that weren't eligible for a tax credit could afford it. So we knew going in that there was probably going to be a likelihood we would take a little bit of a hit. But then the market started to stabilize. People got the services they needed. Their health care kind of balanced out a little bit. And so you saw a lot more insurers coming onto the exchange. So in 2022, there was a record high number of 7 insurers that were participating on the exchange in Kansas. Now, one thing to note about these insurers is that they do not have to participate in all counties. So they can kind of pick and choose what counties that they operate in, and a lot of times that's based on what they think the financial benefit is. Now, once again, talking about Blue Cross, they participate in all the counties that they serve. Now, to wrap up on the Affordable Care Act, I think everybody knew when it first was rolled out that there was an individual mandate. Well, starting in 2019, there was no longer a requirement to have coverage at the federal level. So, whereas and another thing is because at that point, when it first rolled out, there would be a penalty if you didn't have health insurance. Now, for large employers, like I mentioned, most of the rules of the ACA in regards to coverage falls into the individual and small group market. But the one thing that large groups have to do, if they have more than 50 employees, they must provide affordable health care to their employees or suffer a pretty stiff penalty per employee. So that's what I wanted to share on the Affordable Care Act, and hopefully that was something there was something I shared that you didn't already know. But moving on, I'm going to talk a little bit about COVID. COVID, boy, did it change things. I know at Blue Cross and Blue Shield of Kansas, and I know it changed things a lot of other places as well. From a health perspective, what we saw was it really accelerated the use of telehealth. It used to be that telehealth was limited to just certain procedures, certain services. I mean, there was a lot of things you really never would have anticipated telehealth being used for. But we saw it being used, as a result of, like I said, it accelerated telehealth to the point of it was nice to have service, and it almost became a necessity overnight. So we saw services like physical therapy, cardiology, dentistry, things that you thought, what? But I figured the providers knew what they were doing. I didn't luckily never had to deal with a telehealth service, but I was just amazed at how these providers really reached out and did everything they possibly could to make sure that they took care of their patients and they did it in a healthy way. One of the areas we saw the greatest growth in telehealth was in behavioral health services, which includes the mental health area. As you can imagine, COVID created a whole different environment. People were asked not to, to limit their socialization, friends, family, keep it to a minimum, work at home. And I know when you have kids or individuals that live in apartments and are working at home and they really go from bedroom to office, it's the same place. It can create a lot of anxiety in individuals. So the fact that we were able to really provide that telehealth tool to this community and this population was critical. One of the other things that we saw with telehealth is that, as you can imagine, since it wasn't really the majority of how services were performed, there was a little bit of a difference in the reimbursement to providers for telehealth versus in-office. Because as you can imagine, in-office is you got your brick and mortar, you got your supplies, so there is going to be a difference in reimbursement. But during COVID, the realization that these providers needed to spend time, money, efforts in getting their telehealth capabilities set up, it was decided for Blue Cross, and I don't want to speak for all insurers. I know a lot of them did some of the same things. But during the peaks of COVID, we increased that reimbursement so that telehealth and in-office during the peaks of COVID were at the same level. And what I can say about today, because I know we were just talking about this before we retired, is that we still realize that telehealth was going to continue. Maybe not at the magnitude that it had occurred during COVID, but we knew it was going to definitely continue at a much higher pace than it had before. So the decision was to increase telehealth reimbursement from pre-COVID days. Now, there still is a slight differential because there is a slight cost difference in performing in-office visits. But overall, I feel like, from my opinion, that I think moving up the telehealth reimbursement was a good decision, but still keeping the differential makes a little bit of sense. COVID testing. Boy, did they want to make sure everybody got tested when they did anything. And so it became a real concern that if people might not feel like they want to spend the money to get a COVID test, and so maybe they would hesitate in getting that taken care of. Well, luckily, an act was passed that required insurers to pay for COVID tests without any cost share by their member. So luckily, that really motivated people to make sure that they got the test taken whenever they were going to socialize or whenever they weren't feeling good. It's really sad now. You get a cold, you go take a COVID test. You just never know what you're experiencing anymore. The other thing that occurred is that Blue Cross decided that during the heights of COVID, that we would cover the cost sharing of anybody that had to have treatment for COVID. That continued up through 2021. I believe in January of this year was when members started paying their share of their cost sharing for COVID treatment. And that was, I think it's sad to say that COVID's kind of part of the norm now. And you eventually have to kind of move back to the way things were. The final thing is that COVID vaccinations are free to all Americans. The federal government continues to foot the bill for that, and hopefully that will continue going forward. A few other things I wanted to kind of mention that Blue Cross dealt with during COVID. We talked about it a lot. Even the association that we work with, we were doing reporting on COVID on a regular basis. It took a lot of time and effort. And so we also had to realize that there were decisions we needed to make that might be a little different than what we had handled before. And one of those is we saw a lot of elective procedures that were being postponed. Now, in their place, what we saw was a lot of COVID treatment being handled instead. We knew a lot of the elective procedures were going to probably be picked back up, but we also knew there might be one area or two that you wouldn't see that being picked back up. So, and one of those areas was in dentistry. You go in for your 6-month checkup, but if that 6-month checkup gets canceled, you're probably not going to pick it up again. You'll just wait till the next 6-month checkup. We realized that was the case, and we thought, okay, that's one area we felt pretty confident that we might have some extra funds to return back to our members. So we made the decision to return 1 month of dental premiums to our members. Now, you might think, well, that doesn't sound like a whole lot. But it was over $6 million that we returned back to our members as a result of giving them that 1 month premium holiday, or that 1 month premium holiday. Another thing we saw is there were a lot of providers having cash flow difficulties, especially as you can imagine in some of the rural areas. They may not have seen some of the same replacement of services like for COVID that some of the bigger hospitals did. And so what we decided to do, because we believe me, we had a lot of conversations with the providers, they reached out, and we decided to implement a temporary advanced provider payment program. So what we did was we looked for those providers who were eligible and also interested, because we weren't just going to give the money unless they actually wanted it. But we looked at what their claims activity had traditionally been and worked out an advance payment to them so that they could continue to meet salaries and pay for supplies during their cash flow difficulties when there was kind of an up and down cycle of having services performed. And then so we gave them a couple payments, and then as I don't know if it was 18 months or so down the road when elective procedures started picking back up again, we could do a reconciliation and they could, we could make sure that everything was balanced back out with their claims activity. The last thing I wanted to mention was we really also saw a huge supply to personal protective equipment. Number one, it was really in high demand. It was getting very expensive. Blue Cross has a program called Blue Health Initiatives. So they partnered with another entity and provided grants to nonprofits and other businesses who are designing, developing, and creating this PPE equipment, as it's called, to doctors and hospitals. So what COVID really showed us is that it's not always business as usual. We really had to, there were times that we just had to talk about things totally outside our expertise and in regards to COVID being a completely new event that we had to address. And I feel like we did it as admirably as we could. So that's a little bit about COVID. Now I'm going to talk about mental health parity. See, I did a lot of different topics because I didn't want you to get bored on any just one topic. So mental health parity. Mental health parity, I'm going to start with, there was a couple acts that I looked back on. The Mental Parity Act of 1996, clear back to 1996. My husband was actually the director of claims at Blue Cross, and so when I was talking about this, he goes, I remember dealing with that. And what that act indicated was it provided that health insurers could not have annual or lifetime limits for mental health services that were less favorable than those limits for medical surgical procedures. So everybody had to program their systems to make sure that all of that was equitable. Then came the Mental Health Parity and Addiction Equity Act of 2008, and it said that insurers and group health plans that had mental and substance abuse benefits could not have any less richer benefits for the mental health services than they did for medical surgical. So to give you an example, what this says is that if you have a plan and that plan says you have unlimited doctor visits for a condition such as diabetes, then you have to also have unlimited doctor visits for a mental health condition such as depression or schizophrenia. So what insurers have to do is that for every benefit plan that they design, they have to make sure that every medical surgical benefit that they have within that plan is in parity to the mental health benefits that they have. What's so important about this is mental health it's become so important not only in the medical community. I know the legislature continues to look at those benefits, and these individuals have the same needs that any other person does with their physical ailments. When I was at Blue Cross, I was on the board of the New Directions Behavioral Health. They were a contractor that we used for our behavioral health services and also for our employee assistance program. And they had recently purchased a company that was going to help make sure that they provided a well-rounded experience for this population. And what did that mean? That means that number one, that these individuals get quick access to care, which has been a real problem in this particular area. So not only did they need to get quick access to care, they also needed to be assigned to a provider that actually specialized in what their diagnosis was. It's like any profession. Everybody has their specialty. So do the mental health providers. So what this company would also help them do is make sure and monitor the quality of care for these individuals and follow up on the care for these individuals. Because as I mentioned, these individuals are just as important as any other individual in regards to their health condition, and we need to make sure they get the kind of treatment they need. And one of the things we really struggle with is limits in the number of providers that are available. And that's why telehealth is so important, is because it provides access to care that you might not readily have available in the location where you're at. And sometimes it's hard to travel. It's not easy to go leave home and try to get the kind of services you need someplace where you're not familiar with. Okay, I'm going to wrap up with Medicare. Everybody loves Medicare. Actually, my husband just went to Blue Cross yesterday to talk about Medicare because he turned 65 in a couple months. Well, Blue Cross, once again, I always have to, mention Blue Cross. Not only are they committed to serving as many Kansans as possible, they also want to serve those Kansans for their entire life. They have been actively engaged in providing Medicare supplement products since the beginning of time. Medicare supplement kind of goes along with your traditional Medicare that helps pay for those things that Medicare doesn't pick up, deductibles and copays and so forth. Well, Blue Cross decided to start selling Medicare Advantage in 2020. And when you think about Medicare Advantage and traditional Medicare, what's the difference? They both have the same basic services, whether they're Medicare Advantage or traditional Medicare. They're both regulated by the Centers for Medicare and Medicaid Services. The difference is Medicare Advantage plans are administered by your local carriers. Local carriers, if they do it right, they have the opportunity to help manage the care of their population. The more that they can manage the care of their population, the more opportunities they have is to provide supplemental benefits beyond the traditional basic services that traditional Medicare offers. So some of these plans will offer vision, hearing, dental, drugs, gym membership, over-the-counter cards. So there's a multitude of other benefits that might be provided to you based on your Medicare Advantage plan. Now, the reason I mention this is what some of the statistics that I saw was in 2022, it's slightly under half in regards to Medicare eligible participants that actually enroll in Medicare Advantage plans. By 2030, it's projected that the majority of individuals who are eligible will be enrolled in a Medicare Advantage plan. Now, I'm not saying which one's right, which one's, but what I am saying is that it's really important for you to talk to somebody when you get to that point in your life that you have to look at Medicare. Talk to a representative who has the kind of knowledge that they can show you side-by-side comparisons. I was doing that yesterday at the kitchen table, looking at what each plan offers and so forth. And there's a lot of information there. And so trying to do it on your own, even with having two individuals that worked at Blue Cross and Blue Shield in Kansas, we still needed to go talk to somebody. So with that, I think that wraps up my discussion for today. And I hope I shared something that maybe you didn't already know or something you can take home and tell somebody else. But I appreciate you guys being all attentive and hope you have a great rest of the day.